Atul Suri is now joining us. He's Chief Executive Officer at Marathon Trends-PMS. He's with us here in our studios. Atul, good morning and congratulations, 20,000 on the nifty.
Look at that smile. I mean, when milestones hit, you can tell on their face, right?
I mean, been there for so long, it keeps happening. Yeah, so it's good. And I think there are a lot more to achieve.
Is there a tinge of red on your tie, or that is something
You
else?
also have a red tie.
Oh dear.
He's the only man in green.
It's his birthday today, by the way.
Oh, the evergreen man.
How's it looking, Atul? How are things looking? More set for more?
I think so. The fact is that, everyone's got a lot of red flags up. But essentially from what I feel where the market is heading or what my targets were, I see that there is still more upside going ahead. As I said, there's a lot of panic, there's a lot of talk of bubble and there's a lot of talk of all that. I don't think we are anywhere near bubble territory. I think there's a lot more to go. And when trends play out, when they get into this kind of stage, when they get parabolic, really nobody knows the top.
Yeah.
In stocks, in sectors, we do mention names and you say 80% up, blah, blah, blah. Who knows, Nobody knows. And
are we in a
shows.
parabolic phase, you think? Because parabolas also happen towards, they're late-stage phenomenon. They don't happen early or middle.
I don't know about parabolic. Maybe some parts of the market are in parabolic stage. But overall, if you look at the index, now, if you look at the Nifty, there's so much talk, new high, etc. What are we up year to date?
Nifty, I completely agree.
10%,
11%.
I was looking at returns from the 31st of March. Nifty is up 18%.
Yeah.
But we got the small cap index, which is up 45%.
Because you're taking 31st March, Prashant.
Because
you're choosing a very, very,
I was making this point yesterday.
Go year to date. Go 2 years. Okay, 2 years to date. Tell me what is Nifty up? It's up 15, 16, 17%. On a 2-year basis, it's not much. It is what, 6, 7% year on year.
No, I'm saying even compared to from 31st of March, even then, I'm saying compared to the broader markets, Nifty, I completely agree. Nifty is not done very much at all. Okay. But you think gains will pick up there on the large caps?
I think so. I think that there is more upside. And what I say is that you've seen 11% and you're getting this thing, that we can have another 8, 10, 9, 10%, And a lot of people say that, you want to sell out this segment, we should get out, blah, blah, blah. You never know. You could be missing a more interesting part in the market. So I feel that we are not there yet. I feel that we are in a process. And at the end of the day, we are going to have corrections in life. We've seen so many corrections. We saw COVID, right? Recent memory. It was horrible and nobody even talks about it.
But it was in hindsight the best time for retail investors to put in all their money, right?
Absolutely.
If there is one phase where you sell your home and put in the stock markets, it would have been that time in 2020. But
it's all good in,
it's all good in hindsight, absolutely.
So just one thing though, this point, right, I completely agree, but in mid caps and small caps, right, we saw what happened in 2018. You got a top and then it took years for some of those prices to come back.
True.
That is all I'm saying. Is there a problem? You get locked in and you are...
So let's address that question, right?
Yeah.
So that's definitely the narrative on the street, that there's a bubble, euphoria, etc.
No, I don't think anybody actually is saying... I think I heard from Kotak yesterday where there was a note saying that we're dropping coverage because, we can't find value except financial. So what's the point of having... But apart from that, people are okay. What's the risk of getting kind of stuck, right? Because mistakes also happen in very euphoric kind of markets. You've seen that.
Absolutely.
So what's the risk of that?
So there were these numbers being put up like that. Let's say Nifty is up 10, 11%, small cap index up 30, 33%. So 1:3, that's big. So we do something called a ratio chart. A ratio chart is where we compare one index versus another, and it's not from a starting date. The risk is the starting date. If I take 31st March, everything is at risk, okay? But what we did was we did a ratio chart and we realized that historically, we are nowhere near euphoric territory in the large cap to small cap ratio.
Okay.
So we were wondering that, hey, the mood is something else. The screen is telling us something else. But then you realize that for 2022, Prashant, the Nifty was up some 4-5% or something. The small cap index was down 14 to 15%.
Yeah.
So now if you move your starting date from 31st March to maybe 2 years, you'll realize that actually what the small cap is doing is catching up with the underperformance of 2022. So when you start seeing data as a more continuous flow, rather than a start point and an end point, you'll realize that in that ratio, we are nowhere near where we were in 2018 or 2008. You mean the euphoric level. In fact, it is just in the process of catching up the losses or underperformance of last year. Now, when you change the starting date of looking at data, the whole picture changes. So you can actually change a lot from starting. So I personally like to look at things on a more continuous basis. Because see, for all of us and for most investors, see, this is a process. Yeah. This is a process. There's no start point, no end point. No one's going to sell everything.
I think the million-dollar question is, where are we in the cycle, right? Everyone's comparing this to the 2003 to 2008 period, and nobody knows.
No, I don't think we are nowhere near that. We are nowhere near the highs. In fact, we are midway. What I'm trying to tell you is that we are actually catching up the underperformance that small caps have had in 2022.
Okay, so you're saying you're nowhere near the highs, we are midway in the cycle.
Yeah.
But in terms of sectors, I want your view on banks, because, you know, while the Nifty is up 10% this year, banks have done nothing, I think 5% or something, the Nifty bank.
Right.
Do you see leadership emerge now from this heavyweight?
So the same question goes for banks, Sonia. 2022, what did banks do? In fact, banks were the thing that really pulled up the market. So banks were up, I think last year, some very large, it outperformed the Nifty by a big number. So the fact is that banks also are to some extent resting, and they will do a catch up, because see, at the end of the day, the numbers that are coming out of banking space are very good. What is sort of, perplexing is that after those numbers, how come we are not seeing those kind of stock movements? The major contributor to the Nifty earnings are banking. And why is banking not driving? So the fact is that banking had already run up in anticipation of these numbers. Now the market is looking for something incremental. And as I think as incremental stuff comes, I feel that banks will do. Look at NBFCs. Again, I'm stretching the definition of banks and financials. You'll find that a lot of NBFCs are doing very well. The NBFC index, if we had one, would have outstripped most of these guys by miles. Yeah. So I feel that, just because things have moved up, we need to really look at it not from 6 months point of view. Look at it from 2 years, 3 years point of view. Some things that run up like PSUs. Because PSUs didn't do well for a decade. Yeah. Ask anybody who's been in the market for 10, 20 years and all swore never to touch PSUs, because so many times, you had stop starts and disappointments. And what actually PSUs is doing is what they have not, or what they fail to deliver. So I think markets tend to be, excesses happen, it happens on both sides, then catch-ups happen. But if you view it as a process, I think as far as the process goes, I don't think we are at like a bubble top or something. Look at it in a longer-term perspective, things are still promising.
Okay, good to hear that, Atul. And what about, the Nifty? I think when you joined us in the past, you have said 21,500. That's the target you're looking at.
Right.
How soon do you think we get there? We've got plenty of momentum with us, so I ask you that. And also the other one I want to ask you about Brent crude. That surprised everyone. Yeah. It's at around $90 per barrel.
I think I'll come to this question that's more important, is because honestly, if you ask me that what can stop the market, or what is my area of concern, I may sound bullish, but I also have some red flags or some area of concerns. And that for me is US bond yields. The last time US bond yields at that's 4.25, etc., the US markets, the S&P 500, that's I think October 22, were at 52-week lows. So you realize that there is a tendency of bonds and equities to be inversely correlated. Bond yields have again gone back to 4.25, 4.3. In fact, they're nudging to make new highs. And equities continue. So my big risk, or my big concern area is actually global. Because if bond yields take off, we all felt early that, okay, this is kind of the peak of the rate cycle is there behind us. And now the Fed would start cutting by the end of the year. Now we are almost approaching the end of the year, and there is talk of maybe further hikes. So what I'm trying to say is that the narrative that inflation has peaked out, bond yields have peaked out, that is getting pushed. And if that re-emerges, if the Fed gets a little more aggressive, or inflation starts popping up, where crude energy is a very big input of inflation in terms of the kind of price moves that there are, I think that is. So if there's one concern area that really that bothers me, is the way US bond yields are shaping up, the way even some of the commodities are shaping up. At 90, if crude gets to 100 and all, things can get uncomfortable. And I think the narrative, if it changes globally big time, I feel that can actually be a dampener for a market.
I just want to quickly put out, let's have the intradays for mid-cap and small-cap indices. We're seeing a very sharp move on the way down for these two indices. I mean, not usually they start higher and then move higher for the rest of the day. But look at that. This is just today, I think. Yeah, this is just today. So from the day's high, it's a bit of a fall pullback. And I think on the mid-cap as well, similar kind of price pattern. So just FYI, just watch that as we go along. On the Nifty, we still got about 60-odd points or so. Atul, in terms of sectors and where one will make absolute returns from here on, which are those spaces?
I still think that the things that are linked to, your capital goods, engineering, electrical equipments, we've been talking that's the way we are positioned in our PMS. It's more domestic driven. For many years, the market was focused on those few stocks, which definitely were outward focused, export, some of the large IT names, or some of the very high quality names. I feel that trend has really changed in the last few years. I think that the whole thrust or the whole emphasis is going to be more on domestic facing. When the world is looking towards India and where growth globally is a little questionable, I feel that domestic driven sectors, and as I said, we love electrical equipment, they're moved up, we know that. We like engineering, we still like defense. So wherever these stocks are backed by numbers, because that there is never a compromise on. If they're backed by good earnings and numbers, yes, they may have gone up, but I don't think that the party is over. I still think that there is a more upside remaining. So that's the kind of view that there is. So I'm just trying to share with you that, hey, you know what, it's not that we are in bubble and it's over, you should sell and exit. It's a process. It's a process. The markets can correct. Yeah, they can correct 3-5%. Things will happen.
And that's healthy. It's always healthy.
Yeah, but when you look at, you're talking about India's decade, etc., you realize that these are going to happen. Yeah? And in our life today, we're 20,000 and celebrating. Yeah. How many times you've seen the market down and pessimism, etc. But net, I think
you move on. Yeah,
you move on. And
higher.
At the end of the day, all these targets that we give, the number is not so important. The important part is the direction.
Yeah.
And if your direction is right, if you're invested, you're invested in the right stocks, I think that this is probably one of the most interesting, best investments in this country.
Okay, as they say, time in the market is more important than timing the market.
Time, and also
right?
I think you've got to play it well. You have to have a process here. So, even time in the market, 2,000 stocks have got delisted here. Yeah. So if you had a lot of patience with them, you would have got killed. The important thing is the process.
I just want to mention, by the way, since we're talking about, this bull phase and everything, the mid-caps are in the red now. So a little bit of caution is always good, right? I mean, the index is down 120 points, the mid-cap index. It's down about 0.2%. So just want to pull up that index for you. But there is...
By the way, he said, when to hold it? I was reminded of Nigel Kenny Rogers.
Which one is it?
Gambler. Know when to hold it, know when to...
What are these? What is archaic songs that you guys listen to?
His generation. His generation.
Generational gap.
Rogers. Wow.
Okay, no, but there is definitely a FOMO feeling amongst the retail investors, right? Now when you step out, I mean, people are talking about, 20,000, but I missed out, what do I do?
Right.
At this point when retail starts to come in, what is your advice to them on people who've missed out on the rally?
No, it happens. Clients call up for top-up, new accounts. But the fact is that, as I said, that it's about the direction, Sonia. You have to accept that you will come in, yes, at these levels, the risk-reward is not what it was 6 months ago. The risk-reward is not what it was 6 months ago. But the fact is that if you're able to stomach a little bit of volatility, maybe there's a 3%, 5%, whatever, it can happen at any points in time. But more important is the process, The more important is the direction. The more important is that we are at 20,000 after correcting 30-40% 2 years ago. So I feel that if you are mentally prepared and have a process for equities, it's a marathon. It's a marathon, simple as that. It's not a sprint. And that's what most people view it, most people retail. But then they go through it, they get burnt a couple of times, and then they realize what investing is all about. So I strongly feel there's a process. We are a part of the process. I don't think we are at the top.
And just choose good shoes. I mean, good stocks, right? I mean,
for the
that's
marathon.
the only thing for the marathon, and I think you'll be fine.
Save your knees.
Thank you very much, Atul, for joining us. It's a pleasure having you with us here.
Thank you.
On the